Welcome back, everybody. Today we're diving into the world of Nicolas Darvas.
Oh, cool.
He was a professional dancer who, believe it or not, made millions in the stock market. This was back in the 1950s.
Wow.
Yeah, and we're going to be using as our guide excerpts from his book,
Okay.
How I Made $2,000,000 in the Stock Market.
Okay. $2 million back then is...
Oh yeah, it's a lot more than $2 million today.
Yeah.
So this is really an incredible story.
Yeah.
Can you even imagine, like, managing your investments through telegrams
Oh, wow.
while you're traveling the world? That's exactly what this guy did.
I mean, that's just wild, like, just the logistics of it alone.
Right.
But also, like, so interesting to think about how someone, I mean, outside the traditional world of finance, right?
Yes.
Could achieve that kind of success in the market.
Yeah.
Yeah. His story is just like a really unique perspective, I think, on investing that goes beyond the typical Wall Street narrative.
Yeah, so his journey actually began with a performance he did in Canada. Okay. And instead of getting paid in cash, he was offered shares in a mining company
Wild.
called Bruland.
Berland. Okay.
And so he turned that initial $3,000 investment into almost $11,000
Wow.
pretty quickly.
That's a huge return.
Yeah, it's a big early win.
Yeah.
And I mean, that kind of early win, it can be exhilarating.
Oh, yeah, for sure.
But it can also be misleading.
Oh, absolutely.
Yeah.
Yeah, it's easy to get caught up in those early wins and think you've got it all figured out.
Right. And Darvas himself admits that his initial success was more luck and impulsive decisions than any real understanding of the market.
Right.
He even mentions, and I love this quote, he says, "I was a slap-happy, ignorant buyer
Oh, wow.
in those early days."
Okay, so he was just kind of like, shooting from the hip.
Yeah, jumping into companies he knew nothing about.
Yeah.
He even compares his trading record to the trading record of a small-scale stock exchange,
Oh, what do you mean?
just buying and selling constantly.
Oh, I see. So just like super active.
Yeah.
Just constantly churning.
That's a great way to put it.
I mean, it's like that analogy, right? It paints such a picture of his approach back then.
It does.
Really highlights the dangers of just getting caught up in the excitement of the market without having a solid foundation of knowledge.
Yeah, and he paid the price
He did, didn't
for
he?
those early mistakes.
Yeah.
Right?
What happened?
He lost almost half of his initial capital
Oh, wow.
in just 1 year,
Ooh.
mainly from following random tips and letting his emotions dictate his trades.
It's so easy to do that, though, right? Especially when you're starting out.
It is.
You're like, oh, this sounds good.
Yeah.
Or this person seems like they know what they're talking about. I'll follow their lead.
He talks about developing pet stocks.
Pet stocks.
These are companies he favored just for sentimental reasons rather than, like, sound logic.
Oh, okay. So like just companies he liked for whatever reason.
Exactly.
Not necessarily because they were good investments.
Exactly.
Oh, that's interesting.
And that resulted in some of his biggest losses.
I see. So it's the emotional attachment
Yeah.
that can really cloud your judgment.
Yeah, it's a classic case of kind of the emotional roller coaster that
Yeah.
many new investors experience.
Right. That fear and greed cycle.
Right.
It'd be really hard to break free from that.
So how did he break free from that cycle?
Well, he decided to seek out some professional guidance.
Okay.
He transitioned to the New York Stock Exchange,
Okay.
hoping that more established brokers and those financial advisory services would provide him with an edge.
Okay, so he thought, all right, I need to up my game.
Right. Yeah, exactly. Like I need to get in with the pros,
Yeah, I'll learn from the best.
Exactly.
But even with expert advice, he still encountered some major setbacks.
Really?
Yeah, he mentions getting caught up in rumors surrounding companies like Baldwin Lima Hamilton and Sterling Precision, both of which turned out to be false.
So he was still chasing those hot tips.
Yeah, well, he thought they were coming from credible sources,
Right.
but they weren't.
Oh, that's rough.
Yeah, and it cost him thousands of dollars.
Yeah. So even with the expert advice, he was still making those kind of like impulsive decisions
Yes.
based on information that wasn't reliable.
And these experiences were like a crucial turning point for him.
Okay.
He realized that relying solely on those external sources,
Yeah.
even seemingly credible ones, could be incredibly risky.
Yeah.
It forced him to start questioning the information he was receiving
Right.
and seek a more independent understanding of the market.
Okay, so this is where he starts to kind of shift his thinking a little bit
Yes.
and realize he needs to develop his own, like, system, his own approach.
Exactly. And it's like It's not just about trusting the experts blindly.
Exactly. You have to understand it for yourself.
It's about developing that critical thinking and being able to, analyze the information you're getting and not just taking it at face value.
I mean, that's such a valuable lesson.
Yeah.
Right.
Yeah.
Not just for investing, but for life in general.
Absolutely.
So
he's starting to see the limitations of simply following the crowd.
Yeah.
Or blindly trusting those expert opinions.
It sounds like he needed something more reliable.
Yes.
Like a system, something he could personally verify.
Yes.
And rely on.
Exactly.
Yeah.
So that's kind of where we leave off for today.
Right.
So he's realizing that he can't just rely on other people. Yeah. He needs to figure this out for himself.
Right. And I'm assuming that's what we're going to get into next time.
That is exactly where we're going next time.
Cool.
We'll see you then.
All right. Okay, so instead of just, looking at the numbers and stuff, he started looking for patterns in the stock charts themselves.
Exactly, like visual cues.
Right. Darvas began meticulously studying those price and volume patterns.
Wow. Meticulous.
Yeah. He was looking for, visual cues that could give him insight into the underlying forces of supply and demand.
So it wasn't some secret formula that led him to create this box theory.
No, not at all. It was pure observation and pattern recognition, really.
Okay.
He noticed that stocks often traded within a specific price range for a period of time before breaking out either upwards or downwards.
Okay.
He visualized these ranges as boxes on his charts.
So like a visual blueprint?
Yeah, exactly. Like a visual representation of the stock's movements.
Okay.
These boxes represented periods of consolidation where the stock was, essentially stuck between a ceiling of resistance and a floor of support.
Interesting. Okay.
Yeah. And then when the stock broke out of that box, that signaled a potential shift in momentum.
So like up or down?
Yeah. It suggested that either buyers or sellers had gained control and that the stock was likely to move in that direction.
So he wasn't trying to predict the future?
No.
He was just, reading the market's language?
Exactly. Yeah. He was letting the market tell him what to do rather than trying to impose his own will on it.
I like that, it's like the market speaking to him.
Exactly.
He's just listening.
Exactly.
Did he start seeing success right away?
Well, he did have some initial wins.
Okay.
But, he still struggled with a common problem that plagues many traders.
What's that?
The emotional urge to sell winners too soon.
Oh,
I see. And hold on to losers for too long.
Oh, yeah. You see those profits adding up, and you think, I better cash out.
Yeah, exactly.
Exactly. Disappears.
It's that fear of missing out or the worry that, the good times can't possibly last.
Right, right.
But Darvas knew he needed a way to overcome this emotional hurdle if he wanted to achieve consistent success.
So how did he do that?
This is where he introduces a key element of his strategy. The trailing stop-loss order.
Okay, trailing stop-loss order.
Yeah. Think of it like setting up a safety net for your investments.
Okay, I'm intrigued. How does this work?
Okay, so it's a predetermined price point that you set below the stock's current market value. And if the stock drops to that point, it triggers an automatic sell order, limiting your potential losses.
So you're basically taking emotion out of the equation.
You got it.
Yeah.
You're letting the market, not your emotions, dictate when to sell.
And this is where his, unique situation, right?
Yeah.
As a globe-trotting dancer, actually played to his advantage.
Yeah, absolutely. Remember, this was a time long before smartphones and the internet.
Right. Yep.
Darvas was often traveling to remote locations and could only communicate with his broker through telegrams.
It's crazy to think about, just waiting days, weeks for a response.
Felt really good.
It's like the antithesis of, day trading.
Totally. And you know what's interesting?
What?
This forced detachment from the constant fluctuations of Wall Street, it actually became a blessing in disguise.
Oh, I see.
It prevented him from making impulsive decisions based on, short-term market noise.
So he couldn't just react to every little thing that was happening.
Right. He had to think long-term and trust his system.
Wow. So his unique situation actually helped him become a more disciplined and objective trader.
Exactly.
That's incredible.
It is. And this is where we see him really refining his box theory and developing what he called techno-fundamentalism.
Techno-fundamentalism. Okay.
Yeah.
That's that.
Well, it's pretty fascinating. He still valued the importance of fundamental analysis, looking for companies with strong growth potential in emerging industries. But He primarily used his box system to determine the ideal time to buy and sell those stocks. So he was like identifying those promising companies,
Right.
but relying on those price and volume patterns to really time his entries and exits.
It's like a combination of fundamental analysis and technical analysis.
Yeah, exactly. Like using the best of both worlds.
Very cool.
And this refined system, coupled with, his telegram-only approach, really started to pay off. Yeah. He had some impressive wins with stocks like Lorillard, Diners Club, and Universal Controls.
Wow, those are some big names.
Yeah. His careful stock selection, his disciplined use of those stop-loss orders, and his ability to ride major uptrends all contributed to him exceeding that $1 million mark.
That's amazing.
It really shows that a well-defined system, coupled with the right mindset, can lead to those extraordinary results.
But I'm guessing his journey wasn't without its challenges.
Yeah, you're right. Even after achieving, phenomenal success, Darvas faced another crisis, and this one was self-inflicted.
Oh no, what happened?
Well, he returned to New York, feeling incredibly confident after his $1 million wins.
Okay.
He thought he could now conquer Wall Street from the inside.
Oh, I see.
Surrounded by the energy and information flow of the financial district.
Okay.
So he abandoned his telegram-only approach.
Oh, no.
He got caught up in the frenetic pace of the market, started making impulsive trades, and even tried his hand at day trading. Essentially, he abandoned the very discipline that had brought him so much success.
Oh, that's tough.
It was,
It sounds like a recipe for disaster.
And it was. He started losing money, and those losses just mounted quickly.
Oh, that's got to be hard to go from that high to back down.
It's a harsh reminder that even the most successful traders are vulnerable to the pitfalls of overconfidence.
Right.
And emotional decision-making.
It's almost like a Greek tragedy,
Yeah, I know. It's like
he achieved this great success, but he was brought down by his own hubris.
It's a cautionary tale that highlights the importance of staying true to your principles, even when you're feeling invincible,
Right, because the market will always humble you.
Always. The market has a way of humbling even the most seasoned investors.
So how did he recover from this setback?
Well, he had to, get back to basics,
Yeah.
Back to what had worked for him before.
So back to the telegrams.
Exactly. He realized that being in the thick of it, right there on Wall Street, surrounded by the buzz,
The energy.
Yeah, the energy of the market, it was detrimental to his process. He needed to reestablish the distance, the objectivity that had been so key to his earlier success.
So he retreated to Paris.
Yeah, literally distancing himself
Wow.
from the temptations and distractions of Wall Street.
Interesting.
You reimpose that telegram-only rule.
Wow. So he was forcing himself to slow down.
Yeah. To think strategically and just detach from the emotional roller coaster of the market.
It's almost like he was creating friction in his communication on purpose to prevent those knee-jerk reactions.
It is counterintuitive, right?
It is.
In a world that's constantly pushing for faster, more immediate access to information.
Right. But for him, that delay
Yeah.
became a source of strength.
Totally.
Yeah.
It allowed him to really filter out that noise and focus on what truly mattered. His system, his long-term goals, his emotional well-being.
It led him back to success.
It did. With that renewed discipline, a clear head, Darvas returned to New York.
Okay.
And just meticulously applied his box theory again.
Sticking to his guns.
Yeah, this time focusing on high-priced, actively traded stocks.
Okay.
In those emerging industries.
Yeah.
He was really good at selecting companies.
Right.
Based on growth potential, but then relying on the market signals, remember?
Yes.
To determine the best time to buy and sell.
So he mastered the art of balancing fundamental with the technical.
Yeah, he wasn't just following charts blindly.
Right. It was like a confirmation.
Exactly. Using those price movements to confirm his decisions.
And it paid off.
Oh, yeah. Big time. He had some huge wins with companies like Thiokol Chemical, Zenith Radio, and Fairchild Camera.
Wow, those are big movers.
They were all riding that wave of technological innovation.
Right, the growth stocks.
Exactly. His profits continued to climb, and he eventually surpassed the $2 million mark.
It's amazing that even after those big setbacks, he could still come back.
Right, he could have easily given up after that loss with Jones and Laughlin, or even after those, self-inflicted losses in New York.
Yeah.
But he didn't.
And aliens.
He learned from those experiences, adapted, and ultimately came back stronger.
I think this is a good lesson for all of us, you know?
Oh, absolutely.
In any field, really. It's about managing ourselves almost as much as managing, like, whatever it is we're doing, you know?
It's that self-awareness.
Yeah.
That emotional control and the ability to just learn from those mistakes.
So, big takeaway for our listeners today.
Yeah. What can we, even if we're not like, stock market enthusiasts, take away from this?
What are those universal truths that we can apply
to our own lives?
Well, I think about his telegram-only approach, right?
Yeah.
It's a powerful reminder that, especially in today's world of constant information and connectivity, sometimes less is more, you know?
Yeah.
By intentionally creating that distance, limiting the influx of information, he was able to gain clarity and focus.
Yeah.
And, emotional stability.
It makes you wonder if we could all benefit from creating like our own little telegram-only spaces,
Yeah. Like those moments where we just disconnect from the noise.
Yes.
Tune out the distractions and reconnect with our own, like, inner wisdom.
So maybe taking some time each day to just be quiet.
Unplug.
Put the phone down.
Be more mindful of the information we're consuming.
Yeah.
Create that space for thoughtful decision-making and intentional action.
I love that. So Darvas' The Story reminds us that success isn't always about having the most information or being the fastest. It's about having the discipline to follow a system, the wisdom to learn from mistakes, and the courage to trust our own judgment.
He encourages us to be curious, to observe, to develop our own understanding of the world.
Yeah, and to have the courage to act on our insights, even when they go against conventional wisdom.
Beautiful. So as you go about your week, think about what resonated with you from Darvas's journey. What can you apply to your own life?
Right.
Where can you benefit from a more systematic approach?
Or greater discipline.
Yeah.
A more detached perspective.
And remember, you don't need to be a professional dancer.
You got it.
Or rely on telegrams to achieve extraordinary results.
The key is to find your own rhythm.
Yeah.
Develop your own system and have the courage to dance to the beat of your own drum.
I love it.
Yeah.
That's it for today's deep dive. Until next time, keep exploring.
Yeah.
Keep learning.
Keep diving deeper.
And we'll see you next time.
Sounds good.